Hey everyone, welcome back to Corporate Decoder, the place where we help you understand what is really going on behind those fancy corporate documents. And today we are diving into some juicy new debt from Tyson Foods Inc. This filing is a current report, meaning something important and pretty immediate just happened. It's like a company's news alert. And the big news, Tyson Foods Inc. just dropped a whole lot of new debt, $500 million worth. To be exact, they sold $500 million of what they call senior notes. Think of it like this, they are borrowing a massive chunk of money that they promise to pay back later with interest. These notes mature in 2036, so they have quite a long time to pay this back. The interest rate they'll be paying is 4.950% per year. They will pay this interest twice a year, every February and August. This first payment is scheduled for August of next year, so they have a bit of breathing room before the first interest payment. Now, what does senior unsecured mean? Senior means it's a high priority debt. If the company ever got into serious trouble, this debt would get paid back before a lot of other types of debts. Unsecured means it is not backed by any specific company assets like property or equipment. So, if things go south, the people who bought these notes have to rely on the general financial health of Tyson Foods Inc. to get their money back. This is where it gets interesting. When companies take on debt, especially this much, they usually agree to certain rules or restrictions, and these are called covenants. Tyson Foods Inc. has agreed to some here. These covenants limit what the company can do. For example, they generally can't take on more debt that is secured by their assets. They can't enter into certain lease agreements where they sell property and then lease it back, and they can't sell off a huge chunk of their business to another company without some serious limitations. These are all designed to protect the people who lent them the money. And of course, like most debt agreements, there are clauses about what happens if things go wrong. If certain bad things happen, like not paying back the debt or other serious issues, the people who lent the money or a representative for them can declare the entire amount of debt immediately due and payable. In simpler terms, they can demand all their money back right away. And if Tyson Foods Inc. were to go bankrupt, insolvent, or go through some kind of financial reorganization, the debt would automatically become due and payable. This part of the report just confirms that all the necessary legal documents, like the actual debt agreements and an opinion from their lawyers, are being filed along with this report. It's mainly housekeeping to make sure everything is official. This exhibit is essentially the actual IU for the debt. It details the exact terms that were just discussed, the amount, the interest rate, the maturity date, and all the other specifics. So, what does this all mean for Tyson Foods Inc.? Taking on $500 million in debt isn't something a company does lightly. It suggests they likely have plans for this money, maybe for expansion, acquisitions, or perhaps to refinance existing debts. With interest rates seemingly stable for now, securing this funding with a 4.950% rate over 12 years could be seen as a strategic move. However, the covenants are a key indicator that they are conscious of their financial obligations and are trying to maintain a healthy balance. Looking at Tyson Foods Inc., historically they are a major player in the food industry known for their processed meats and poultry. They operate in a highly competitive market, with fluctuating commodity prices and consumer preferences being major factors. This debt issuance could signal a move to strengthen their market position or invest in new areas, especially as the food industry continues to transform with new technologies and changing consumer demands for healthier and more sustainable options. The risk here is always about execution. Tyson Foods Inc. needs to deploy this capital effectively to generate returns that justify the cost of this debt. If their investments don't pay off, servicing this debt could become a strain. Also, any downturn in the broader economy or in consumer spending on food could make things more challenging. In conclusion, Tyson Foods Inc. has secured significant funding that provides them with flexibility for future operations. The terms seem reasonable given the current market, but the company must ensure its strategic use of these funds leads to growth and profitability. It is a calculated step that adds to their financial structure, and we'll be watching closely to see how they utilize this capital. Alright, that is our breakdown of Tyson Foods Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.